Happy Monday, traders. Sorry about the late start here. We're 5 minutes behind the clock. It's 8:05 a.m. Chicago time on Monday, the 3rd of August, 2020. This is episode number 1810. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Risk on across the board this morning. The DAX is leading the pack up 243 points, or 1.96 to 2% off of settlement. And the Euro stocks are up 38 points, or 1.19%. We had a strong pop in the overnight session. The Nasdaq is up 100 points, or 0.93%. The Russell's up 9.6 points, or 0.65%, and the S&P is up 21 points, or 0.65%. The laggard today is the euro. The dollar is stronger today, so the euro, the cable, the yen, gold, these are all lower. The euro being the one that's weakest. The bonds are off 26 ticks, very close to a handle, and the 10-year note is down 4 big ticks. So clearly risk on sentiment. The market's being aggressive this morning and has pushed higher. We are gapping up in the S&Ps and in other products, and it's all sky high from here. So that's where we stand this morning. The move was very strong this morning when it came through. The biggest things that are allegedly or supposedly driving the markets, there are a couple of big plays here in the U.S. One is this COVID relief package, and it's politics being what they are. There's a back and forth, and there's some battling and so on and so forth in between the different parties as to what this relief package is going to look like. And of course, being an election year, this is very likely to be a circus. So that's where we stand this morning. There was news overnight. In fact, it came across at a very odd hour. It's at 4:20 Central, is 5:20 Eastern U.S. AM. Trump is considering unilateral action if no COVID-19 relief deal is put through. That came across, and the market took a little bit of a pop. I don't know that it's correlated. Not really sure, but that's where we stand this morning. Other than that, it's pretty much a non-farm payroll week, unemployment week here, and so we're going to see we're likely to see some positioning before the number later this week. I'm looking at too many things and I'm distracted. I apologize for that. But looking at the high impact numbers for the week, real briefly. We have the RBA rate decision out of Australia this evening. U.S. balance of trade on Wednesday. Thursday, BOE rate decision. That's the Bank of England. And then on Friday, a balance of trade out of Germany, non-farm payrolls, and that wraps up the week. In terms of earnings releases, AIG reports after the close today. McKesson already reported, and there's a whole bunch. Disney, BP, the big ones. Disney, BP, CVS, T-Mobile, and Cardinal Health are the big ones this week. But that's really it. I don't imagine that this week will be heavily driven by that. We got the biggest portion of our earnings done last week. The banks have reported, the FANG stocks have reported. But earnings continue, and it's really about politics going forward. So that's where we stand. That's where we stand today. Let's take a look at what was expected on Friday versus what we got. Friday, we coming into the session. Remember, this is RTH here. This was Thursday's RTH session, the pit session, and this was Friday's ETH, extended trading hours. And we were coming into the session, and I had mentioned that heck, it might have been CC'd. Yep, there it is. We're at the apex of a triangle right into the open, and what I had mentioned is a very likely break. What does that tell us? I'll give you a moment to figure that out. In the meantime, blah blah blah. Anyway, I talked about the market being at the apex of this triangle, and so we had a very balanced profile, and we expect a break one way or another. Now, I basically, I traded that poorly. I was looking for a turn after the breakdown. I was looking for it to come and retest this area and turn around. So I was looking for a scale in into this zone here and ended up completely screwing that up. But my game is not 100%. This is that time of year for me, to be honest with you, where my game is there are too many distractions and my game is not on point. But it is what it is. Trade small at the moment, and I regain the zone or get back into the flow of things with time. So just patience and pacing myself is the way to go. So the two scenarios were a consolidate, break out to the high side, and start pushing to where we are today. Looking for the 83 and 90 area. These are the targets for scenario one. Otherwise, we're looking for a breakdown and a tag of the 50s and 40s and so on, and coming all the way down to this 32.19 area. And so that was what we were looking for on Friday. So what happened on Friday? There it is. We open. Let me get rid of these boxes. Oops. We open up at 32.58, this green set of boxes here. We come back, and we're immediately responsive. We come back into the zone here, and we hold up pretty decent against the high volume node from Thursday. We start to attempt to rotate up, and then it just lets go and pushes to the downside. Finds balance in the 23-quarter area, double bottom. There pushes back to where? Pushes back to the mid. On point here, pushed through the mid by about 4 ticks, and then rotates back and breaks the IB low, and finally tests that 1250 area. I did expect it to kind of hold this area here pretty good, but it ended up building a point of control down here. And then the afternoon, from 1 o'clock Central onwards, it was rally time. And we ended up with a neutral extreme up day, a market that had basically rejected that lower price completely and finished on highs. And so we finished into that 32.65 target area, built a high volume node at 32.65, and that really sets us up for today being a rally day. One thing I want to show you, so bear with me a second. Here's the bigger picture context here. This is a daily RTH only profile. RTH only profile, and the blue profiles on here are the weeklies. These are the weekly profiles, and this is the reason behind the 65 target is that point of control up there from 2 weeks ago. Last week is an inside week. We had a higher low the week before. We had 91.50 at the low. Last week we had a 95 low. Remember, we're watching that 91.90 area as a major area. If we break below, we would likely test into the 31.69, 31.50, and then 31.19 becomes really important to watch. And what we have is a market that built this point of control in the middle of the weekly range and has tested. This is Friday. Friday opened up high, tested the below the point of control, the most important price in this area, which now is 32.27, and finished even higher. And now we're pushing above that. 71.75. We have a double top here from the 22nd and 23rd. Yep, 22nd, 23rd. We have a double top at 71.75, and we are pushing above there. So what does that mean for the current environment? We see that range is starting to pick up. Volume has started to pick up, which is nice to see. But overall, what does this mean for today? So when we're looking at today, and by the way, we've been one-time framing up pretty much for the month of July. We've been pushing these higher lows all along. We are in a pretty steady, on the weekly, we're in a pretty steady push up, and we've been doing so for a little bit of time. I believe it started down here actually sometime mid-June, and so there's a fair amount of strength here, buying dips and pushing higher, and now we're above the 32.71.75. And if we scroll out, we see that we actually left a gap zone up here at 33.06 and a quarter. We have a gap zone that we're filling, and it's pretty much clear sailing into 3,300 to 33.06 from here. And so what we're doing is we are breaking out of accepted value. We're breaking out of accepted value, and we're pushing away from these high volume nodes, as you see right here. This is a comprehensive microcomposite for this area, marking the low of the swing from March or May. And then, this is an intermediate one from the beginning of July when we started to turn up, but we're moving away from these value areas and pushing higher. And so that's really important to note. So today, as we come in here and look at where the market is, we have to take into consideration the fact that we are opening right up here, and the expectation, given that we've got that double top at 32.71.75 and so on, the expectation is that the market is likely to fight any move lower. So today we have a pretty good opportunity to see what the auction really wants, in that we get to see if buyers step in, if sellers are strong and are responsive. The last few times we've come up here and made new highs, we have sold off. We were not able to maintain these higher prices, and so the market has been kind of weakish on the rallies, weakish on the sell-offs as well, since dip buying just comes right in. And so as we push up, think of it like as we shimmy our way up, almost like a spelunker or a cave climber, kind of squeezes their body into these spaces and kind of shimmies their way up a little tunnel in a cave. This is what we're doing. We're kind of squeezing higher and higher and higher, and squeezing those shorts out. But when we push lower, buyers do push in, but when we push higher, we come off pretty strong, as we did back here on the 23rd. So the question this morning would be, do we have a gap that is responsive, or do we continue? And if we continue, then we're going to have to target the high volume node right in here, just above 3,300. It's about 3,302 with a gap zone at 3,306. So really important to watch today to see, do we hold this area up here? Remember, between the high of 71.75 and 67, it's just 4 or 5 points. Does this act as a stable surface, to retest? This was resistance before. Does it behave like support now? And if it does, then shorts are just really going to get squeezed into 33.06, 02 and 06, and likely 33.50 is the next big acceptance area up, and then we're at all-time highs. We're seeing the same thing in the NASDAQ, where the NASDAQ is just squeezing and squeezing and squeezing and squeezing, and it's likely to make new all-time highs in the next rotation if it continues higher. So today, pay very close attention to how the opening is. Today's a good day to watch the opening and see what it's trying to do. In the overnight session, this is a 240. Let me switch to a 5-minute. So you can see we opened, pulled back, we held these prices, these higher prices in the overnight session. Let me bring this back. We held these higher prices in the overnight session, and we started to squeeze to the upside with a profile that is a double distribution profile. Pretty light volume, 270,000, or I won't say light. It's in line with what we would call normal, and we are squeezing from one distribution into another. And so what does that say? That 71, 75, 72 area is very important. Keep an eye. Whether we are sellers or buyers today is a function of do we get below that line or do we not? Do you remember where that 72 comes from? Yes, you do. It's a double top from 71.75, and then it's created a double distribution, low volume node, very clear risk reward setups here in the overnight session. Very clear. Do we hold above this area or do we not? So let's look at what we're expecting for today. Da-da-da-da-da. So here we're squeezing them in. We're looking at multiple days just to keep the context in play here. We're opening up here in the 81.50 area. The expectation this morning is an auction that is responsive. I'm looking for the market to potentially come close or test that 72 area, impulse up, and then start to squeeze into 32.90. Once it clears 32.90, it really is clear sailing towards 3,300. It is Monday, and we do have non-farm payrolls at the end of the week. I'm sorry this is going long, but there's a lot going on here. There's a lot of structure. But I'm looking for a squeeze today to the upside. Why? Because we're moving with momentum and we have broken away from balance. This is the most important fact. We have broken away from balance. We're broken away from balance and we are in a gap, and I expect that this is a high probability risk reward situation here for an early trade. I would pay very particular attention to what the market does at the open. That's the primary scenario. The secondary scenario is we open and we finish the impulse that we have from the overnight session. This is a pretty sweet impulse up here, pretty strong push. We finish the impulse, take out the overnight high, and then get into 90 and just struggle with 90 and end up with an impulse down that takes us back into the 33, and then we squeeze lower into the 64, 65, come into line with Friday's close, consolidate in here, potentially push down a little bit, but hold steady, and then this way we are basically squeezing out the late longs. And there have been a lot of momentum longs, weakish longs, non-structural longs that have come into the market lately and have given back their gains, as we did, say, on Friday. That was kind of a scenario that we had. So that's where we stand. Sorry this went long, but it's the early in the week and there's a lot going on structurally, and I want you to do the best that you can. Good luck, and I'll catch you tomorrow. Take care.